When we talk about the AI revolution, we always think about the smartest algorithm or who has the most data. But what if the biggest factor for success is just the electricity bill? See, underneath every AI product, there's this hidden engine that really decides who wins and who loses. And that engine is the cost of compute. If you don't get this one piece, you really can't understand the AI industry. So let's break it down.
So yeah, this is the big question, right? Why is AI so ridiculously expensive to run? I mean, it feels like it should be cheap. It's just software. But the answer to this is going to completely reframe how you look at the entire AI landscape.
Okay, first things first, and this is probably the most critical idea to wrap your head around. AI is not software. At least, it's not software in the way we've thought about it for the last 30 years. And honestly, this is the mistake that trips up almost everyone.
There has been a massive fundamental shift here. Traditional software, it's all about write once, run forever. You build the app, and the cost to serve one more customer is basically zero. But with AI, it's a whole different ballgame. Every single time a user asks for something, it kicks off billions of calculations on some really specialized, power-hungry hardware. That means there's a real, tangible cost for every single interaction.
And that's the perfect way to put it. Every time you use an AI, you're using real-world resources. You're spinning up electricity. You're using cooling systems. You're tapping into actual physical machines. So even though you're just typing into a chat box, what you're really doing is firing up an industrial-scale process in some data center hundreds of miles away.
So these industrial costs, they really break down into two big buckets that every single AI company is wrestling with: training and inference. First up, you've got the training cost. Think of this like the insane upfront investment to build the model in the first place. This can run into the hundreds of millions, sometimes even billions of dollars for those huge frontier models. It is a massive capital expense. But then there's inference. This is the ongoing day-to-day operational cost. It's the cost of actually using the model. Every prompt, every image generated, every single query, it all adds up on the inference bill. And believe me, this is the cost that can really sneak up on you and become the real killer.
It's funny, because training costs get all the headlines, right? But over the lifetime of a successful AI product, it's the cumulative cost of inference that really tells the story. The cost of serving millions of users day in and day out absolutely dwarfs that huge initial investment. It's not even close.
Okay, so now that we know about these two big cost drivers, let's talk about what that does to the business model. This constant cost of inference creates a really unique and kind of scary challenge: totally volatile gross margins.
I mean, in the old world of classic software as a service, or SaaS, the margins are they're legendary. They are famously high, super stable, and incredibly predictable. All because the cost to serve another customer is so low.
Yeah, we're talking 80% or even higher. It is a beautiful, beautiful business model once you've built the thing. Serving more people barely costs you a dime.
AI margins, though? Oh, they are anything but stable. They bounce around in real time depending on how people are using the product. There's this direct and often really unpredictable link between how much it's being used and how much it costs.
So why? What's actually causing this wild fluctuation? I mean, what are the things that can make one user's session 10 times more expensive than someone else's?
Well, it's a bunch of things, really. For one, just how long a user's prompt is can change the cost a ton. Then you've got the complexity of what it's generating. A simple answer is way cheaper than a complex one. Of course, sudden spikes in usage, like if something goes viral, can just completely blow up your budget overnight. And underneath all of that, the base efficiency of the model itself kind of sets the minimum price for everything.
So this dependency on compute, it goes way beyond just one company's balance sheet. When you zoom out, you see it creates this huge strategic risk for the whole industry, what we call the hardware bottleneck. And this isn't just an operational headache. It's a hard ceiling on growth for everyone.
I mean, think about it. Every single user query starts this chain reaction. It goes from the app to the foundation model, down into the data center, and it ultimately has to get processing time on a finite piece of physical hardware, a GPU. And here's the kicker. There are only so many of these chips in the world, which creates this insane competition for a totally essential resource.
And that brings us to a really crucial point. In this new world, having access to, or better yet, control over these physical GPUs isn't just a tech advantage anymore. No, it's powerful economic leverage. It's what determines who can build, who can scale, and frankly, who gets left in the dust.
All right, so let's put it all together.
we've got this industrial-style cost base. We've got the two-headed monster of training and inference. We have these wild margins and a massive hardware bottleneck. So, what's the new golden rule for actually making it in the age of AI?
It's really this simple. The companies that are going to win in the long run won't just have the smartest models. They'll have the most efficient ones. Just picture two AI companies with equally brilliant products. If one of them can deliver its service for half the compute cost, it won't just have better profits. It will have the cash to out-innovate, out-market, and ultimately outlast its competition.
And what this means is that we, all of us, we need to start changing the main question we ask when we see some new AI breakthrough. For years, we've been trained to focus on just one thing, but it's just not the only thing that matters anymore.
The real question, the one that's going to determine who can scale, who can be profitable, and who will be here in 5 years is this: how expensive is it to run? Because that question, right there, is what truly defines the economics of AI.
So in our next explainer, we're going to tackle another one of those huge tech cliches you always hear. Data is the new oil. Is it really the ultimate moat in AI, or is that whole story just a little bit overblown? Make sure you follow along because we are definitely going to break that one down.